gentlemen, good day and welcome to Central Bank of India Q1 FY2024 earnings conference call hosted by Antique Stock Broking Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Raju Barnaval. Thank you, and over to you, sir.
Thank you, Aman. Good afternoon, everyone. On behalf of Antique Stock Broking Limited, I welcome you all to the Central Bank of India Q1 FY24 earnings conference call, and I thank the management for providing this opportunity to host a call. From the senior management side, today we have with us Mr. M.V. Rao, MD and CEO, Mr. Vivek Vahi, Executive Director, Mr. M.V. Murali Krishna, Executive Director, and Mr. Mukul Dandigi, Chief Financial Officer. So now, without further delay, I hand over the call to MD, sir, for his opening remarks, post which we will have a Q&A session. Thank you, and over to you, sir.
Yeah, thank you, and good afternoon to all the participants, and let me thank wholeheartedly for your time investing in our analysis part. And just I will give the brief highlights of our performance for this June quarter, and detailed financial presentation will be done by our CFO. And coming to the highlights, let me share the happy news that this is the 9th straight quarter where bank has recorded the net profit, and this net profit has jumped by 77.87%. Now it stands at 418 crore. Compared with June 22 amount of 235 crores. And coming to the gross NPA, which was 14.90, now it has come down to 4.95. So net NPA stands at 1.75%, and then provision coverage ratio now stands at 92.23%. And operating profit grew by 50.53%, now stands at 1,838 crores. Net interest income, NII, increased by 48%, now at 3,176 crores. NIM improved to 3.62, registering a growth of 74 BPS. And return on assets, there is an improvement of 16 basis points, now stands at 0.43%. And return on equity is 1.63, vis-a-vis 0.98% of financial year 22. And CRAR, that is capital adequacy ratio, has improved to 14.42%, of which Tier 1 is 12.13. Coming to the other ratios, like yield on advances, now it stands at 8.29, which is 195 basis points higher than the previous June 22, which was at 6.34, and the yield on investments is at 6.50, which is 37 basis points more than the previous June 22. Cost of funds slightly increased because of the increase in the rate of interest in all the deposits. Now it stands at 4.42. Cost of deposit is okay. Coming to the NIM. Now it stands at 3.62, which is 74 basis points more than the June 22, which was at 2.88. And coming to the credit cost, now it stands at 0.45, and in the previous June 22, it was 1.78%. Coming to the ROA, already I told you it is at 0.43. These are all the financial highlights. And regarding the details, anyhow, we have uploaded our presentation in the website. Probably you must have gone through, but anyhow our CFO will explain with little bit details. Thank you.
Thank you, sir. So the total interest income has improved by 30.75% on a YOY basis, and it stands at 7,225 crores. The total interest expenses have gone up by 19.65% at 4,049 crores. And in net interest income, as MD sir said, it has registered an increase of 48.27%, and it stands at 3,176 crores now. The operating profit, which is a significant part, has improved by 50.53% and it stands at 1,838 crores. And the net profit improved by 77.87 crores and it stands at 418 crores as compared to 235 crores for the last quarter of the 22 year. The fee-based income has remained more or less the same at 401 crores compared to 406 crores for the previous quarter. The major part of fee-based income is our service charges, which is at 276 crores. The treasury income, which is at 282 crores. Then the expenses part, if we come, the interest expenses have moved to 4,049 crores, registering an increase of 19.65%. And the interest paid on deposits, which is the major component, has registered an increase of 20.07%, and it is at 3,930 crores. The operating expenses have increased by 31.11% at 2,297 crores. Major portion of that is the staff cost, which is now at 1,490 crores, registering an increase of 31.98%. As far as the provisions and contingencies is concerned, the provision made for NPAs is 244 crore, which is lower by 70.39% on a YOY basis. The standard asset provision has increased to 632 crores from a write-back of 38 crores. The tax outgo has increased to 607 crores compared to 73 crores during the same period last financial year. So the total provisions are at 1,420 crores. The asset quality, as I mentioned, the gross NPA has moved from 14.90% to 4.95%, and the net NPA has moved from 3.93% to 1.75%. In absolute terms also, the net NPA amount has come down from 6,785 crores to 3,718 crores. If we see the sector-wise NPA, there is substantial improvement during this quarter, and the net NPA total net NPA is 1.75%, with retail at 0.74%. Agriculture and allied at 4.58%, MSME at 3.13%, and the corporate and others at 0.38%. The capital adequacy ratio is at 14.42% compared to 13.33% in June 22, wherein the CET has improved from 11.41% to 12.13% now. And similarly, the leverage ratio has improved from 4.32% to 4.94%. This is after reckoning the net present value of the recapitalization bonds which the Government of India had issued. Thereafter, the business performance, if we see, the special mention accounts, if we see, the above 5 crores book, if we see the outstanding was at 1,200 crores in June 22. That has gone up to 2,750 crores in June 23 because of one major account under corporate category where it has come under stress. Thereafter, if we see the business performance, our total business has improved by 8.55% and stands at 5,83,261 crores. The deposits have shown an improvement of 6.05% and stand at 3,63,398 crores. CASA grew at 3.17% and has crossed 1,80,000 crore mark. And the total advances growth was 12.95% and the total advances stand at 2,19,863 crores. RAM, which constitutes almost 66% of our total advances, has grown by 13.15% and it stands at 1,44,477 crores. Deposits, within deposits, the total constitution is current has slightly degrown by 2.76%. Savings has grown by 3.81% and the core time deposits have grown by 9.07%. The retail, which is one of the focus areas of the bank, has grown at 17.11%. MSME has grown at 15.46%, and agriculture has grown at 5.51%. So that comprises, that constitutes the total growth in advances at 12.95%. The credit risk-weighted assets also have remained more or less the same, and we continue to be under 65% of credit risk-weighted assets to total gross advances ratio. The bank has got a very diversified loan book with risks spread across various sectors: housing loan, auto, personal loan, and education loan, comprising the total retail book of 63,641. Agriculture comprises 40,812 crores, 19% of the book. MSME is 40,024, which is 18% of the book, and corporate credit is 75,386 crores, which is roughly about 34% of the total book. The total composition of the retail book is home loan constitutes almost 62% of our total retail portfolio, and the growth in home loan was 24.37%. Auto loan is 5%, roughly 5% of the total loan book. The growth was 2.65%. Education loan, we have done a lot of education loan for the elite institutions of IITs and IIMs, and the growth there was 8.04%. The personal loan segment, because of a very low base, has shown a good improvement now at 26.70%, and it constitutes only 5.96% of the total retail advances. Rated standard advances, as the bank has got a policy of, because of the advantage in CASA that we are enjoying, so we have that luxury of getting good rated corporate accounts. So we have continued that journey, and AAA, AA, and A-rated advances have shown an increase in the total rated advances book. Out of 78,094 crores worth of eligible accounts and rated accounts, 66,423 crores comprises of BBB and above rated book. The sanctions and disbursements under normal and also co-lending have shown a very good uptick, and our co-lending book, where we had the first mover advantage, we still continue to hold on to that advantage, and the co-lending book has touched 7,178.50 crores as of 30th June of 2023. We have achieved all the mandated targets under the priority sector, and not only achieved, we have surpassed those targets. As far as the other important ratios are concerned, the provision coverage ratio is at 92.23%. Our net interest margin, as MD sir has told, it is at 3.62% for the current financial this current quarter. So those were the other highlights of our performance. Now I can request for any of the questions. We are open for the questions. Yeah, investment book, because it comprises almost 1,43,500 crores of our book. So investment book has remained almost same, but it is very, very well spread out, and government securities are at 1,06,125. The debentures and bonds are at 31,009 crores, and the others are at 2,819 crores. If we see, the yield on investment has shown an uptick at 6.50%, and the yield on investment, if we include the trading profit, it has crossed 6.81%. All this keeping the M duration under check at 1.93%, whereas the 10-year benchmark yield is at 7.11%.
Should we open the line for Q&A, sir?
1 second. I'll also tell you about the distribution across HTM, AFS, and HFT of the treasury book. So under HTM, we have almost 74.05% of the total book at 1,04,712. AFS is 36,431 crores at 25.76%, and held for trading is only 261 261 crores. This was June 22. Vis-a-vis, if we see now in June 23, out of 1,43,500 crores, the HTM book is 1,06,097, which is almost 74%. AFS book is 25.73% at 36,924 crores, and HFT is 479 crore, which is 0.33% only. The modified duration, if you see during this comparable period, now the modified duration stands at 1.93, and the modified duration only for the SLR portfolio is also at 1.62% only. So that is all I had to say. Now we are open for any questions that analysts may be having. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashok Ajmera from Ajcon Global Services Limited. Please go ahead.
Thank you for giving me this opportunity. Before I start, let me congratulate Mr. Mukul Dandige for having his name having been cleared to be appointed as the Executive Director. Compliments to you, sir. And compliments to Mr. Rao and the entire team for a very good set of numbers if you compare these numbers with the corresponding figures, because in last even 1 year also the bank has really performed very well. Having said that, on this particular quarter, on the June quarter, sir, I have got certain observations and some questions and some few clarifications. One is that our we have done a major write-off in this quarter. In fact, of a huge amount of almost about 8,000 crore as against 9,500 crore of the entire year last year. So one was the strategy and what is the planning went behind it and what is the reason? Of course, it's a very good thing that we have come, our gross NPA has come below 5% for the first time after so many years. Secondly, on net advances, I'm talking mainly on the quarter, sequential. It has gone up to 2,12,690 crore against 2,02,980 crore. So about almost about 10,000 or 9,500 crore increment in the net advances. Where has this come from? In this sector. If you can give some color on that. And third thing is, sir, on the SMA book for this quarter. I think the book has gone little bit deteriorated if you compare with the last quarter. Above 5 crore, it has gone up to 2,750. And in fact, SMA 2 has gone up to 180 against 40 crore only. Similarly, below 5 crore, it has gone to 3,581 crore against only 267 crore. And if you check here also the SMA 2, I'm talking about mainly. And even SMA 0, SMA 1 of course has come down, but SMA 0, SMA 2 and overall. So what do you read in it? Are there more delinquencies? And what is the future? Coming in the coming quarter, what are we going to see? Are we going to see some pressure on that? And other one is on the income front. We have done well on the profit before tax, 1,025 as compared to 903 crore in the last quarter. But because of the higher tax provision of 606 crore against 332 crore, so this 606 crore on a profit of, is there any other element other than the direct tax, and whether the tax is stable or the DTI is, all those adjustments are taken care. So net amount payable is maybe less or something. So on this tax front, if you can just highlight, I have got a couple of more questions also on the investment book. But then I'll come later once you please give the answers to these questions. Thank you.
Yeah, Mukul, give the clarification on the tax issue.
Tax part, sir, I can clear. See, if you see, sir, the provisions majorly have gone up on standard assets, where I do not create any DTA. So because of that, the tax outgo has been there. So that is why it appears that the effective tax rate is almost like 69%. So because on standard asset also I have to create, tax outgo will be there at 34.599%.
Okay. So on that 632 crore, that provision we made on the standard asset.
Right. Standard asset में जो provision किया सर उसमें we do not create any DTA.
Yeah, correct. I understand.
Right, sir.
So, Ajmer Sahab, regarding this SMA accounts, your observation was very much in the right perspective. I would like to give the clarification. This is the bank where we give the entire SMA book that gives the above 5 crores and below 5 crores put together. It is not just above 5 crores we give. It is the entire SMA book we provide to all our investors because to maintain the transparency and to have the clear insights of the SMA.
We appreciate that.
Having said that, regarding the above 5 crores, there is an increase that what you observe. It is just because of one big account of the aviation industry that has come into the SMA zero.
Go here.
I do not want to give the name that what you are saying must be in the similar line. Okay. Because of one account that has gone up above 5 crores, we have enough buffers in that which we have given to stock exchanges when this item came up in the newspapers just 1.5 to 2 months back. And coming to the up to 5 crores, there is a increase. In that increase also when we have analyzed, the majority is from the GECL book. Actually, when we have seen the GECL, total sanctions what we have in the GECL is around 6,900 crores, and right now outstanding is only 2,932 crores, in which total SMA book in this GECL is 1,257. So this is the actual SMA granularity part, where that spurt is there in the up to 5 crores bracket. This is the SMA analysis, and to give the confidence to all my participants here, let me make it clear that our slippage ratio is 0.53, and going forward also we have the full grip on the regularization of these accounts. Even if something extreme happens, because GECL book is completely protected in terms of the coverage, guarantee coverage that is available. But this is not the point for complacency for the bank, but recovery efforts will continue. And our endeavor at that point of time is to ensure that these units starts working and they continue to work. If something happens, it comes into NPA, that recovery measures will continue. This is a limited submission. If something extra, the details required, we are ready to provide. Thank you.
Sir, on that credit, the net advances increased to 9,706 crore. That was my first question. What is the component of that? I mean the segment.
Retail advances, if you see retail, there is a growth of 17.11%. MSME, there is a growth of 15.46%. And agriculture, there is a growth of 5.51%. Corporate has grown by 12.58%.
I'm talking only for this quarter, sir. Sequential.
This quarter. Okay.
So sequential growth, which is, as 2,12,690 net advances versus 2,02,984.
Oh,
so 9,706 crore, where has it come from? Which segments and where?
See, net advances basically क्या होगा? So because of the technical write-off also there will be because the provision held earlier quarter was comparatively higher. So the net advance was comparatively lower. Now this time around, because of this technical write-off of 7,804, the net advances have increased.
Now you want the details of this?
No.
What you want?
What point I am deriving is that in this quarter, the advance is then in that case real credit is mute, maybe 0.5 or 0.6%, isn't it?
No, it is reversed.
Yeah.
Actually, whatever the increase that you are seeing from March to June, add the technical write-off also to that. the actual increase in advances will cross the 16%, 16 to 17%.
So that's what only I'm saying, sir, that if it is a real credit in this quarter, where has it come from?
You want a retail, how much disbursements are sanctions in this quarter? Yeah, we will give you the details.
Because it is net to net.
Yeah, we understand.
The gross I can understand. It is because of the technical write-off. Anyway, sir, I will pass this question. I'll take it offline. Then my question is on, sir. Another one is on co-lending. Co-lending we have performed very well, and our book is now more than 7,700 crore. Can you give some color on that, sir? What kind of yield are we getting? What is the slippage or NPA situation there? Is there any particular problem in some of the accounts or some segments?
Let me tell you, sir, in co-lending, we have the total outstanding of 7,178. In this, SMA is around 218 crores. And actual NPA, what has slipped is 2.79 crores. Decimal. It's all, it comes into decimals only. I cannot put it in percentage because out of 7,178, it is only a fraction that has gone into the NPA and a small amount, less than 1%, 1.5, will be under total SMA.
That is greatly commendable, sir. What is...
Mr. Ajmera, sorry to interrupt you. May I request you to join the queue for any follow-ups, as we have several participants waiting for their turn. Thank you. The next question is from the line of Sushil Choksi from Indus Equity Advisors. Please go ahead.
Sir, congratulations to Central Bank team for a very sustainable result and very growth-oriented outlook for the year on the guidance side. Sir, my first question, I'll take it from Mr. Ajmera, very left. You've done remarkably well where co-lending is concerned on 7,000 crores. Can you just break up what sectors? Is it more on housing or MSME or what is it starting with?
Maximum is in housing, and in that it constitutes around 4,600 crores, and followed by the MSME, it is 2,552 crores.
Sir, seeing our book at 39,000 crore on housing currently and where our MCLR stands, do you foresee that our net advances on the annual basis in FY24, almost 25% of our advances or almost nearing 27 to 30% would be housing loans in the book?
Yeah, it should range in the similar way. See, one thing, sir, what we are doing here is consciously we are maintaining the balance of 65-35. I am explaining this 65-35 part. Even in that 65 RAM segment, retail, agriculture, MSME, almost it contributes 30%, another 30% remaining is 40%. So in that similar proportion, whatever the disbursement we are making, we are consciously seeing that growth should be in such a way that this broader ratio should not get disturbed. In that way, we are acting. And coming to the nitty-gritties of exact housing, your observation will be right that we will be reaching a growth of 25 to 27% in housing.
My next question is more on treasury outlook. Mr. Wahi last year had forecasted very well, and we were the first of the block among all the banks, whether it was private or public, on forecasting. What's the outlook of the bank and Mr. Wahi on the quarter and the year to come by on treasury?
The treasury forecast more or less continues to hold what I had expressed in the quarter of March. There could be a minuscule rate hike possible in Indian tax. In U.S. economy, of course, we are eyeing at least one or two hikes, but almost Indian bond market, again, 725 continues to be a toppish level. Presently, it is 710. So from Q4 or now, of course, it is a dynamic situation. From Q4, we are seeing some reduction in the duration, as well as we also, that is why we are building a little bit on our duration book also. So this is our forecast, and we are still holding on to that.
Sir, a couple of questions I'm combining. One is, what is outstanding sanction limit? Second thing, what's the outlook on subsidiaries? I see a great profit achieved in all the Grameen banks and some of the subsidiaries. And third is, do you estimate our advances growth much higher than the system? Because based on our CASA matching advances, we have much higher and better potential on a sustainable CASA to garner at least retail advances higher than the system.
Sir, as far as growth in the advances, we will be very, very conscious. We will never put the accelerator on that, never be aggressive. Having said that, since our PD ratio is 60, and to achieve a reasonable bottom line, we should reach at 70. But whatever forecast we have given for the March 24 we will be reaching around 66 to 67%. So in the similar way, our activity will be there.
But will it led by retail, or it will be led
65? That's what I am saying.
You will maintain the ratio.
The bigger picture always remains the same on the credit book. So whatever the percentage that is required, accordingly we will tweak and we will accelerate our activities in that particular direction.
The brand central bank is attracting a lot on RAM and specifically on retail and including co-lending. So that was a question pertaining to
that. Yeah.
Sir, before too many questions come on the airline account, how much of provision and assets we have as security? I understand that there is not going to be any liability on the bank where this account on provisions are required. I mean, provisions may be required, but NPA is not likely to happen in absolute terms.
See, in absolute terms, almost we are holding 67% of the provision. So we are not much worried on this account because we have already built up the enough buffer for the extreme scenario.
No, but is my understanding right that we hold sufficient assets where, other than the airline, in terms of guarantee, personal guarantee and others, to back the loan program which we have originated for the...
Yeah, I think in the entire industry, this is the account where we have good collaterals.
Yeah. Sir, on the subsidy, you didn't answer the profitability aspect.
Just a minute. Subsidy.
Both are profit.
Both are profit making. Yes. Both the RRBs are profit making. Well, what is that specifically you want on the RRBs?
Is the profit sustainable? Because that can add to our bottom line.
It is sustainable because see, all these two RRBs already they have presented to us 3-year roadmap for their turnaround, and already 1 year is over, and they are on the same track. And wherever that is required, our bank is also providing hand-holding for them. So they are on track and they are showing the profits. And whatever the liabilities that were there regarding the pension liabilities as per the Supreme Court, that is also fully provided for. Now there is no amortization or anything in that book.
So our share of profit based on the numbers provided is sustainable for the year. That's what you assume, based on the economy.
Yeah.
Okay.
Correct.
Sir, my last question on the government holding. I think we have reached a stage that we may be taking a little positive flight on the much faster than the system. What is your outlook on the holding pattern, sir?
That is, let me not divulge the things which right now under discussion with the government. Let us wait for some more time.
Mr. Choksi, may I request you to join the queue for any follow-up, as we have several participants waiting for their turn. The next question is from the line of Drashti from Thinkwise Wealth Managers. Please go ahead. Drashti, your line is unmuted. May I request you to please proceed with the question? Please unmute your line, Drashti. It seems there's no response from the current participant, and hence we'll move to the next question. That is from the line of Akash Jain from Ajcon Global Services Limited. Please go ahead.
Congratulations, sir, on a good set of numbers. My question pertains on the outlook on credit cost. What is the outlook for the credit cost for FY24? And what is the recovery target from return of accounts?
As far as the credit cost for the FY24 is below 1, that is the guidance we have given, and we will continue to hold on to that.
Okay. And with cost to income ratio also going down, right now the ROE is at a subdued level. So what is our expectation in terms of improvement in ROE?
Yeah.
See, the ROE last time, last financial year, the ROE was at 6.42%, right? So we expect that this time around, it should be in the range of 7 to 8% minimum.
Okay. And target for recovery from return of accounts?
See, return of accounts, let me tell you, major chunk of return off, that is what I am saying is a technical write-off. It is not the regular write-off. Regular write-off, it is usually only a minuscule part that comes. And whereas in the technical write-off, unless until there is some resolutions, whether if accounts are taken by the NARCL or some resolution happens in the NCLT, then we will have, some kind of positive movement in the recovery. As far as March 23, earlier we had 1,200 crores in this segment. Let us wait for the developments, what is going to happen, because up to in the June quarter we had only 190 crores only till now. Unless until major accounts are, resolution happens, so we can't expect anything in this TW accounts.
Okay. Okay. Thank you, sir. That is all from my side.
Yeah.
Thank you. A reminder to our participants, please press star and 1 to ask a question. Next question is a follow-up question from the line of Ashok Ajmera from Ajcon Global Services. Please go ahead.
Yes, sir. Sir, little more dwelling on that airline account only, Go Air account only. Sir, I believe that our total exposure, including fund-based, non-fund-based, altogether is around, in the range of around 2,000 crores. Now, our provisions are also, you said, is sufficiently provided for 60-65%. But what is my question is that provision is one thing, which is an accounting thing, but actually, if something goes wrong, how much out of this 2,000 crore our bank will be, because Bank of Baroda is also there. They also got substantial exposure, little lesser than us.
Let me give you the figure, sir. It is almost 1,930 crores, that is the total amount exposure, of which almost 620 crores is guaranteed by the government under GECL. So our actual exposure comes to 1,400, and against which already we are holding around 800 crores provision. And whatever the collaterals we have, we are sufficiently secured, and we are not seeing any type of haircut or loss even in the extreme situation. Having said this, let us be aware that this company is admitted under Section 10 of the IBC, not for the insolvency or bankruptcy purpose. It is as to preserve and then to take up the operations once again. So in this direction, it got admitted, and then necessary, inspections that is also happening from the DGCA, and there is some positive movement in the arbitration, final arbitration at the Singapore arbitration also. So in all possibility, we are, optimistic as far as this particular company activities are concerned.
Oh, sir, thanks a lot, sir, for giving a great insight. In fact, that gives a lot of comfort, and you are always very transparent. And because this was one major account which suddenly came up, like otherwise, even our profitability and bottom line also would have been much better than, because of this provision, it has affected the basic targets which we were making, not you. But anyway, my second, which I couldn't ask in the last time, is on the overall treasury. Of course, a little bit explanation has been given about the treasury book and the modified duration period. But just going forward, with this, I think yield is around 7.1 or 1.1, and our modified duration is 1.93 or 1.75 in some, the thing. We have our comfortable AFS book and very small book for the sale. So what is the future outlook on treasury now going forward? Because our rates are almost stable here. In US, still some pain is there. So considering that, how much cushion do we...
Let me tell you, sir, our philosophy for our treasury is very simple. When we have seen our credit book and investment book, the principle on which we are operating is, let us not have any losses from the treasury book. And we don't expect profits also. We expect only reasonable return for the amounts what is being invested in my investment book. For that only, we took a very drastic decision in the previous year so that we could bring this modified duration almost from 6.5 to 1.9 now. And then PV01, which was hovering around 17, to the existing 5. So this is the principle on which we operate. We do not want to get hit because of any circumstances in the money market or in the broader macroeconomic circumstances. At the same time, we expect a reasonable return from our investment in the investment book on which we operate.
No, that's a very good, especially in these times, it's a very good strategy which you are adopting. And of course, even the treasury income is also quarter on quarter is becoming good only, as against 128 crores. This treasury income was 282 crores. So definitely, and thanks for giving your perspective on that. Having said that, sir, I just want to know the overall restructured book, including the GECL, and how much percentage, as per our experience, we feel or we think can be slipped.
See, total restructured book, what we have is 6,400 crores, of which standard restructured book is 4,400. Standard...
all standard.
These are all standard.
COVID is 4,000.
COVID is 4,447. And in this, what will be the slippages as you are concerned? We do not have much bifurcated issues, except we capture them under the SMA accounts only. Because in this SMA, we have the restructured book stressed accounts and also GECL stressed accounts also. So SMA slide will give you the right picture rather than the slides if you see of the restructured book or GECL book. Because these are all the standalone slides. It is given just for the information for the analysts.
Yes, sir. So this SMA 0 above 5 crore, 1,773 crore versus 253 crore. So out of that 1,773 crore, how much is that airline? This quarter it is around 500, 700 crore, 1,000 crore. How much is SMA 0? Because I believe this airline account is only in SMA 0 only.
It is 1,300 and almost 1,300 crores airlines.
Okay.
Out of 1,773. Yeah.
Do you think now it will slip to SMA 1 and then SMA 2?
Yeah.
Okay.
See, in the March quarter itself, we have cushioned foreseeing some type of stress in this.
All right, sir. Thanks a lot, sir, for giving great insight into the bank's operations and for the future guidance. I wish you all the very best, sir. Thank you very much.
Thank you very much. Thank you.
Thank you. Any participants who wish to ask a question may please press star and 1 at this time. The next question is from the line of Narendra from Robo Capital. Please go ahead.
Hello. Congratulations on a good set of numbers. I just wanted to know if you could shed some light on the loan book growth for the year FY24 and also NIM targets that you might have for the whole year.
For the credit guidance, what we have given is 14% for the 23-24. And our definitely we will be reaching that you can take it as a floor level, 14.
So there's a chance to improve that too, right?
Yeah, there is a chance.
Okay. And the NIM?
The NIM already, previous year also we have given floor, we have given the 3, and we will continue to hold on to the 3 and over and above. Because of some of the things, one-off incomes also comes in between. But with the core operations, we always say we will be above 3.
Okay. Thank you so much, sir. All the best.
Thank you.
Thank you. The next question is from the line of Rushil Dedia from Antique Stock Broking. Please go ahead.
Hello.
Yes, Rushil, please go ahead.
So I wanted to ask you, so NIM decline for the quarter was high by 15 basis, which was led by a sharp increase in the cost of deposits, right? And there was also a fall on the yield side as well. So what percentage of the deposit book on the bank is yet to be repriced? And also, what is your outlook on the NIM going forward again?
See, as far as the NIM is concerned, vis-a-vis cost of deposit, this is only if you exclude the one-off item, there is a 1 basis point difference from the March 23 to June 23. Why I am saying March 23 to June 23 instead of taking June 22 is that is a lag effect that what we had, on the rate increase in the advances and then subsequent increase in the deposit rates. The deposit rate effect comes after a lag. So having said this point, 1 basis point, that is the difference what we have in the NIM. But as far as our guidance goes, we always say that we will continue to be above the floor level of 3 that we are going to maintain. As far as the cost of deposit that increase, definitely in the market the way rates are being increased, though we do not have that much of necessity and also having a liquidity of almost 35,000 crores to be in the market and protect our turf, we have increased our term deposits. That's why growth is around 8%. So I think in the next 9 months, this is going to stabilize in the similar way, and we are going to protect our NIMs the way guidance what we have given.
Okay, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that would be our last question for today. I now hand the conference back to the management for their closing comments. Thank you, and over to you.
Yeah, thank you for all the arrangements what you people have did for this conference, and I thank you all the participants for their investing the time. And once again, I assure you that bank is on the sound footing, and then whatever the guidance we are giving, that we are sticking to that, and we will continue to excel in the area. Thank you.
Thank you.
Thank you very much. Ladies and gentlemen, on behalf of Antique Stock Broking Limited, that concludes today's call. Thank you all for joining us, and you may now disconnect your lines. Thank you.